Hello, welcome to Strictly Money at the News Forum, where all voices matter. I'm Saijal Patel. There are well over 1 million Muslims in Canada, and for many of them who observe Sharia law, investing in saving for retirement can be challenging. That's because, aside from following strict guidelines, halal investing options are still nascent in Canada. Joining me now to discuss Sharia investing and the considerations is Danielle LeClaire. She's a director for manager research for Morningstar here in Canada. Danielle, great to have you on.
Great to be back. Thanks for having me.
So, Danielle, for those who aren't familiar with halal investing or Sharia investing, can you start by explaining the fundamental beliefs behind it?
Sure. So the fundamental beliefs in halal investing or Sharia investing can really be kind of narrowed down into four main principles. So the first one is they are not permitted to receive interest from their investments. That's a big one. We can probably get into that in a little bit later on when it comes to just kind of bonds. They can't go into highly speculative stocks. So, buying a lot of stocks that have a lot of leverage, day trading, short selling, that type of thing. They also have to share in the profit and loss in their investments. And so, generally representing some form of ownership of the assets that they have. And then lastly, there's a list of kind of forbidden activities, pornography, pork, gambling, those types of things that have to be avoided as well in their investments.
Yeah, so let's talk about the first one that you mentioned, because I think this is the one that's probably familiar to most people, is that you can't receive interest from fixed income investments. So bonds are out, GICs. How do they get around that?
Sure. So bonds are, as we talked about, not permitted because of the interest component, which generally favors the lender over the borrower in that situation. And so something that is a Sharia compliant investment is called a sukuk, and it's actually not a debt instrument. What it is a Sharia compliant certificate of ownership interest in a tangible underlying asset. And so when you're receiving income from those type of investments, it's not actually interest income. What it is a pro rata share based off the amount that you've invested of the revenues of that particular instrument. And so, people might think that sounds like a stock, but it's not, because you actually don't own anything the way that you would with a stock where you have partial ownership.
Okay. This one really surprised me, and that is that you can't invest in a business whose main profit comes from interest. So banks are out, and this is a tough one because financials make up a big chunk of our index, right? A lot of the even pension funds carry it. How do you get around that?
It is a tough one, particularly for Canadian investors, given, like you said, the six banks that we have here. But, honestly, there is no way around it in terms of, they just get a lot of their revenue from this leverage and from kind of mortgages and loans and that type of thing. So it's something to be aware of when you're talking about like diversification. I would say on a global scale, there are some Islamic banks that you can invest in, but those generally are in the Middle East. So not something particularly, available to Canadian investors.
Okay, so then stocks are permitted? Like capital gains are okay, dividends are okay, or does someone have to be aware of the type of dividends that are paid?
Exactly. So there's a nuance with the dividend component. So you can receive dividends, but if you have an investment in a company that even has an insignificant portion of its revenues that come from an impure source, then those dividends, that portion of the dividend needs to be what's called purified. And that purification process is essentially donating that portion of the dividend to charities.
Okay. What about preferred shares then, Danielle? Because that's kind of a hybrid, right? You get paid dividends, but it's at a fixed rate.
Exactly. So there's really two reasons why preferred shares are not applicable or don't qualify for Sharia compliance. And one, as you mentioned, that fixed dividend is essentially interest, similar to a bond. And so that would be prohibited. But then secondarily, within a corporate structure, preferred shares are actually ahead of common shareholders.
Yeah.
And so that concept of sharing in terms of the profit and losses, you have an advantage for a preferred share. So that's why they're prohibited.
Okay. We have about 45 seconds to the break. Danielle, how does gold fit in?
Gold is a tangible asset. And so in terms of whether, there's a lot of Sharia investors or Muslim investors out there that do hold a lot of gold just because there is none of these kind of conflicting elements to it based off their principles. So actually a really common thing for them to have in their portfolios.
Okay, so they can actually hold, is physical gold or gold stocks is also fine then, I'm assuming?
Under my understanding, it's fine for gold specific stocks. Now that's different maybe for kind of gold miners or where there could be some nuance in the investments, but kind of hard gold stocks they could probably invest in. Yeah.
Okay, we're going to take a quick break and we'll continue this conversation. We'll be right back. Welcome back. Danielle, we've been discussing what's included and what's not included when it comes to Shariah investing. One of the guidelines, and you had talked about this, is that you can't invest in companies that conduct businesses and in activities that are forbidden, right, by Sharia law. So you mentioned pornography, gambling, alcohol, probably marijuana stocks as well. What I wanted to ask is, would this be considered ESG investing, or is it quite different? And what are the nuances that people have to be aware of?
Yeah, it's a good question and one that I think is really important to dive into because, there is an element or a subsegment of ESG investing that is predominantly values based. And so there's some commonalities there in terms of the screening and from a social perspective, do you want to be invested in those types of stocks out there?
Mm-hmm.
But Sharia investing doesn't necessarily equate to ESG investing. And what I mean by that is ESG investing is explicitly considering the impacts of environmental, social, and governance factors on your investments. And that's not necessarily what we're talking about with Sharia investing. So, for example, a big one is that fossil fuels are actually permitted under Sharia law. And so, a lot of ESG investors would probably not want exposure to that or consider that a bad thing. So that's something to consider. But one of the things I will say is that, along with the push that we've seen generally towards incorporating ESG, we have observed that as well in some of the strategies that we track in other markets about being really, well informed and thoughtful about integrating those factors. So you definitely can find Sharia compliant strategies that are ESG friendly, but I think you have to really kind of take a step back and look at that first to really understand what your investments are.
Okay. What about real estate? I have to think
So
everyone's interested in real estate. So are there considerations that those observing Sharia law have to think about?
if we're talking about actually kind of going out and buying a home from that perspective of real estate, it's definitely permittable. The only compliant, issue to consider is the mortgage aspect of it. So generally
Yeah.
speaking, those who are following Sharia law or, Sharia compliant investing kind of things wouldn't really go near any kind of mortgage opportunity. And so making those down payments would have to be kind of hard cash, I guess you could say, and then kind of go from there. So it is that mortgage element that makes it a little bit more complex.
Okay. So I guess the bigger question is that how does someone who is trying to be diversified and create a diversified portfolio manage this, right? Because it seems like there isn't a lot of options in Canada. It's tough. Well, what's your thoughts on that?
Exactly. So, to be honest, this actually surprised me a little bit. Based off Morningstar data, we did an analysis on mutual funds and ETFs that have either been deemed Sharia compliant or have a name that suggests that they're Sharia compliant. There's about 650 globally, but a lot of those are dominated in certain markets. So, for example, Malaysia has over 300 strategies available to them. In the US, there's only 14. And here in Canada, we only have 2. So, really, that diversification aspect from a kind of, publicly available mutual fund or ETF is not really there. You sort of have to go and do some side investments one-on-one with your advisor. So I really see there an opportunity kind of to grow in the space from a fund company perspective. Obviously, this is an underserved, portion of the population.
Yeah, so they would have to go overseas, I guess, and to be able to build that portfolio, wouldn't they? So go to places like Malaysia, Indonesia, big as well, I would think.
It is. I think it's number 2 on the list when I pulled it. So definitely a lot of exposure there. I will say though, kind of going overseas again from a registered product perspective, there's a
Yeah,
tax implication to consider
there
there
is.
too. But yeah, that would be the only way that they could do it at this point.
So, what are some of the ones that Morningstar does track, and what is available in Canada for investors?
Sure. So the one in Canada that we've seen are it's one called the Global Iman strategy. It's a global equity strategy, and there's also a global equity strategy as well from Wealthsimple. And so, to your comment on diversification, the products are actually registered in Canada, but their opportunity set is global. So that sort of helps a little bit with what they're looking at. We have seen some new entrants. So, for example, Manulife has actually launched a new Sharia aligned product for their group retirement plans, which is a great thing to see. But I still think there's a lot of room there for the Canadian market.
So how do you think this plays out? We have about 40 seconds.
Sure. You know what? I think there's a lot of opportunity to kind of ride the values based investing, stream that we've seen more broadly, and really create these opportunities for these types of investors. And there might even be investors out there that aren't necessarily following Sharia law. That this could be a good opportunity for them as well. There could be some value alignment is also there. So I think an open architecture or open mindset to this type of investing would be a really great thing to see in Canada.
Yeah, I agree. Thanks so much for coming on today.
Thank you so much.
Danielle LeClaire of Morningstar. Stay with us because when we come back, we'll discuss self-directed investment platforms and how to pick the right one for you.